Let's get an FYI view on all that's happening in our markets. Jonathan Schiessl of Ashburton joins us on the phone line all the way from London. Jonathan also manages the Ashburton India Equity Fund, and he has a lot of nifty companies that he's been holding in that fund. Jonathan, hi, good afternoon, and thanks for joining us. Before I start talking about your fund, just wanted to ask you, how are you approaching the emerging market space as an FII investor ahead of the key US elections?
Good afternoon. Yeah, I think a lot of foreign investors have been very underweight emerging markets as a whole for the last 3 or 4 years, and certainly I do believe that there is a move afoot, more broadly based, to increase emerging market weights, generally speaking. And I think if you look at performance year to date, you've seen a bit of a move back into some of the more commodity-producing emerging markets as opposed to the likes of India, which has lagged a little bit. We think that sort of move is probably quite long in the tooth, and probably you'll see some attention coming back to the likes of India. But obviously there is some concern about US election event risk, and obviously that clouds things in the very short term.
Jonathan, hi, good afternoon. A lot of your stocks have done well, but today I want to talk about a couple of the stocks which have not done well. Infosys, which has again hit a new 52-week low, and Sun Pharma, which has hit a multi-year low, and you have significant holdings in both. Are you perturbed by what's happening, or are you tempted to add more?
I've got to say, we've been looking at both the names, and we are, I think, very, very tempted. I think we are seeing value re-emerge in a lot of names in both the IT and healthcare sectors. The issue remains one of just what I briefly mentioned before, event risk. Certainly today, some of obviously the pharma generic counters are taking a pounding on the back of concerns about generic pricing in the US. And you could argue that certainly for Clinton, the issue of drugs pricing is as core to her as the likes of Mexico to Donald Trump. So certainly there's still a lot of event risk around certainly some of these generic names, but I think they're certainly factoring in more than a worst-case scenario, and we're beginning to see value again. And the same goes for the IT space. Obviously, will companies have to change their business model if Donald Trump wins? So we see value. We're certainly looking at it, but the trouble is, we haven't got a great deal of clarity of which way this US election is going, and so we're still holding off for the time being. But there's no doubt there is some value emerging in both those sectors.
So for Sun Pharma particularly, the fear is that a lot of these companies that have an exposure to the US markets could be under pressure because of pricing control by the US authorities. Now there is a probe on possible price manipulation as well. Would that not spook you?
I think it certainly spooked the market. I think the reality of how on earth they think they can prove anything is going to be another matter altogether. I think this is going to be an overhang for the sector for a number of years, but the reality of the situation is going to be extremely difficult for the administration, the government, to actually prove price collusion amongst this disparate amount of businesses. It's not just one or two companies we're talking about here. There's quite a number of companies. So I think this is going to go on for a long time, and therefore, well, that's the issue. There's value there. Some of the concerns are being priced in, absolutely, but there'll be noise for quite some period. I think ultimately, I would expect that for a longer-term investor, that these are fairly good levels to be thinking about these stocks. But because ultimately, we do think it's going to be extremely difficult for them to actually make a watertight case.
Okay. Jonathan, you have significant exposure in Tata Motors as well. What's your thought on what's happening with the Tata Group and the boardroom battle? Do you think these stocks are set to derate more, or do you think they will remain immune to this development and actually move on from here, and this could be a buying opportunity? What's your thought on that?
So I think, considering that the Tata Group as such has been held up as the poster boy of corporate governance for India, incorporated for many a decade, this is what's happened is not great, to put it frankly. We still don't understand. There's been a lot of rumor and speculation, but as far as I'm aware, and there's something, new news has come out, I still don't understand what exactly has happened and why, what has happened and the reasons behind it. which, for a group which has prided itself on transparency, that's not particularly great. For the underlying holdings, I think it depends very much on, for example, if you look at Tata Motors, we've got a professional management in place, the strategy is baked in. I'm not concerned whatsoever that the rupture at Tata and Sons is going to have any impact on Tata Motors per se. So any fall in the stock price that's been related to this whole issue, to my mind, is absolutely a buying opportunity. Obviously, if you look at maybe perhaps Tata Steel and the issues they have in Europe, where the previous chairman was a lot more involved, then I think, yes, there will be more of an impact. But I think if you look at Tata Motors or even TCS, these are professionally managed companies with very clear strategies that, that the whole issue with Tata and Sons is not going to affect those companies.
That's true, but the other issue or the other worry is what has played out over the last couple of days, where the Securities and Exchange Board of India has decided to seek details from Tata Group companies on possible breach of corporate governance issues as well. And generally, when things like this happen, there is a corporate governance sort of discount that some of these stocks are given. Would that worry you, that there could be an underperformance of the Tata Group stocks over the next, say, 3 to 6 months?
Yeah, I think you make a very valid point. So I think whenever these sort of things happen, it will provide a bit of a overhang for the stock in the short term. Or the stocks related group entities, all of them. So I think that's true, and obviously we'll have to see what comes out with regards to the actual report. So I would thoroughly hope, or certainly very much hope, that the group is given a clean bill of health, but we don't know. Just because there's an investigation, it doesn't mean there has been any wrongdoing. But obviously, it does provide, for the next, as you say, 3 to 6 months, a bit of a cloud over the stock until we have some greater clarity.
Okay, the other interesting stock that I wanted to discuss with you, Jonathan, was Arvind. What did you make of the deal, of the multiples taking stake, and the fact that we have seen a bit of a re-rating of Arvind, and do you expect more going forward?
Yeah, so one of the reasons we've been in this stock for a few years was down to that portion of the business, which was the exciting portion of the business, which plays into this aspirational consumption that Arvind certainly was, to our mind, the price was not reflecting the brands it had in its portfolio and the growth opportunities. So I think it was, obviously, when you look at the pricing that deal was done at, most sell-side analysts had not been pricing anything like that sort of valuation multiple. Again, when you looked at the commentary around the deal from the management and the growth prospects for that business, I think there has been, to some extent, a reappraisal from certainly sell-side analysts to start upping their valuation numbers for that side of the business. So we're still, that was our original thesis, which is playing out. And in the short term, you could probably argue a lot of that good news is in the price, certainly, but obviously from the medium to longer term, with the growth prospects that business has, and more clarity on evaluation for that business, I think we're still quite happy with the counter. Obviously, in the very short term, it's probably done its stuff.
Okay, so last question before we let you go. You have been a bargain hunter of sorts. You've always been interested in stories, when the sector and the stocks are in trouble. So now that we have a bit of a dip in our market, anything in the Indian markets that you've been interested in lately? Any IPOs that you've bought into? Any stocks that you've accumulated?
Yeah, interestingly enough, we have been looking in the auto ancillaries. We take part in the Endurance Technologies deal. We weren't part of the IPO, but we had a stock on the listing. I think it's a great way to play particularly the two-wheeler space. So we have been involved there. I think if you look at the overall market, there's no doubt that some of the large cap names are beginning to screen value, particularly against some of the mid and smaller cap indices, which only a few days back were making new all-time highs. So I think the large cap space certainly does look quite good value here, but then obviously the other side of the equation is you are much more prone to FII flows in that large cap space.
Stock, what IPO did you just mention? I'm sorry, the line was a bit scratchy. You said you participated in some IPO recently. Which one was that?
That was the Endurance Technologies.
Endurance Technology, okay.
Yeah, yeah. So, which is auto ancillary play.
Okay. Jonathan, a slightly more macro question on what's happening with the fund flows. October was really bad for our market in terms of FII outflows, and the market really was supported by domestic inflows. Do you think this market is at the risk of this outflow actually picking up as we move closer to the Fed rate hike?
Yeah, I mean, to my mind, I'm not too concerned about the Fed rate hike for India per se. Obviously, there are concerns about what is happening with the dollar. So I think in the very short term, with this event risk with the US, the way things are swinging around so violently, I think people probably are just battening the hatches down a little bit in the very short term. I do think, though, that investors are increasingly looking to get back into emerging markets as a group. And therefore, I do think India, with everything that's been going on, with this gradual recovery beginning to play through, with interest rates still heading south as opposed to north in many other markets, I still think the story ultimately is an attractive one from a global basis with the underlying growth, et cetera, et cetera. So, we're going to get these periods where flows come and go. We know that. That's the reality of the world that we live in. But I think ultimately, I think investors are interested in India. And I know from my discussions with multiple investors that there are a lot of investors who are looking to certainly up their India weighting going forward.
Okay, that's interesting. Well, we leave it at that. Thank you so much for giving us a lot of time and speaking to us about all your holdings as well as